There aren't many fintechs that trade as cheaply as PayPal stock. PayPal has a long way to go to get near its all time high. Regarding share repurchases, the company should keep the pedal to the metal. Its transition from growth to value isn't a bad thing. Let's dive in. PayPal stock is up 34% from its 5-year low. Here's why it's time to buy. Welcome to Timely Investment Research. There hasn't been a lot of good news to report for PayPal shareholders over the past 5 years. PayPal stock is down 35% in this period, 121 percentage points worse than the S&P 500 on a relative basis. There are many reasons for this lack of performance. However, if you're a glass half full person, that it's up 34% since hitting a 5-year low on October 27, 2023 might help. It is an indication that the worst could be over for CEO Alex Chriss, who officially took over the top job on September 27, 2023. Former CEO Dan Schulman remains on the board until May's annual meeting. In early February, I discussed 3 issues Chriss faced as he worked to remake its business. If you're a risk-tolerant investor, I think you nibble at these prices, waiting for a clear indication that it's on the mend. That probably won't be until 2025. I recorded on February 5th. It's up about 10% in the 2 months since. However, it didn't take a big dip on February 8th after announcing its fourth quarter 2023 results, but they've recovered and then some. Although I was skeptical of PayPal's near-term success as it worked to dig itself out of a big hole, I do believe that the worst is over. Here's why. Repurchases and PayPal stock. There is no question that PayPal is fighting to become relevant again in the fintech space. As CEO, Chris can only solve what's immediately in front of him before expanding his vision to more grandiose strategies. In June 2022, PayPal initiated a $15 billion share repurchase program without expiration. As part of its July 2018 program, it repurchased $4.2 billion of its stock at an average price of $102.44 in 2022. It finished 2022 with $15.86 billion available to buy back its stock. In 2023, it repurchased $5.0 billion at an average price of $67.57. It has $10.9 billion available on its latest repurchase program. In the company's February 7th conference call, CFO Jamie Miller said it allocates typically 70 to 80% of its free cash flow to share buybacks. Given that it expects $5 billion in free cash flow in 2024, it usually would only repurchase $3.75 billion at the midpoint of its target. However, with $17.3 billion in cash equivalents, and investments on its balance sheet, it opted to repeat its $5 billion repurchase from 2023. As recently as July 2021, PayPal stock traded as high as $380. With a total debt of just $11.3 billion, it finished the year with $6.2 billion in net cash, and free cash flow is expected to increase by 18% in 2024. If PayPal's shares only rise to $190, or half its July 2021 all-time highs, the return on investment for these buybacks will be significant. It's a no-brainer. PayPal's valuation remains undervalued. Wedgewood Partners, a St. Louis-based investment manager with $1.2 billion in assets, is the sub-advisor of the Wedgewood Fund. The fund invests in a focused group of 19 to 21 stocks with market capitalizations greater than $5 billion. PayPal is the fund's fifth largest holding with a 6.7% weighting. In mid-March, Barron reported some comments from Wedgewood Partners' chief investment officer, David Rolfe, and Aswaf Damodaran, a professor at New York University's Stern School of Business. PayPal is trading like a coal mine that has a finite life, Barron's reported Rolfe's comments. It won't take a whole lot to get it re-rated. As Barron's article pointed out, PayPal's 12-month forward price-to-earnings ratio was 11.5, half Block's multiple and similar to banks such as PNC Financial Services and U.S. Bancorp. According to Morningstar.com data, the two banks' average 3-year annualized revenue growth was 7.5%, about 35% less than PayPal's. So, at least from a revenue standpoint, PayPal's growth is not getting much love from investors. Even with disappointing earnings per share guidance of $5.10 in 2024 and a 34% increase since October, that's still only 13.1 times 2024 earnings per share. The company's 5-year average forward PE ratio is 23.6, much higher than today. The bottom line. Professor Damodaran says it best. Barron's reported Damodaran's comments. It's a less attractive company in terms of growth potential, but a more attractive investment from a valuation perspective. In 2024, PayPal announced 3 executive hires, including Chief Marketing Officer Jeff Seeley. He previously was the CMO at Cash App and Afterpay, 2 of Block's big revenue generators. It's going to take time for Chris's team to gel. Patient investors ought to be willing to wait. At these prices, it's not a value trap. It's a buy. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.